No one can do it better. No one can do it better. No one can do it better. Here he is, the poet.
This is to listen to, so ask not a question. Not to be taken as a simple suggestion, but a warning. To whom it may concern, if knowledge is the key, then I think it's time you learn. Though there is not the problem, so leaders are acknowledged. I don't follow them, I turn into another degree. And find the D.O. to the C and growing like a tree and causing much destruction because of crushing.
Hey, it's Soleil, and this is episode 481 of the Orange Pill Investor. And today I want to address some of the heartburn that people are feeling and comparing Strategy's price in the short term to Bitcoin or IBIT and saying that Strategy's underperforming because of the ATM or the 21, ever since the 21-21 plan or just in general. And yeah, maybe I should just be talking about Tesla, which I will definitely address. And maybe I should do that first because I do kind of want to catch the pump. I think I can sell my Tesla call and get basically like a triple. Bought for 75. So I should probably take some of these rare wins when I can. So thanks for the reminder, Kevin. Could this keep ripping to 450, blah, blah, blah? Sure. But my expiration date is January. So I didn't really take, this wasn't a leaps to begin with. I didn't really take I didn't give myself a lot of time to be right. So the fact that I was right on this, I mean, hell, a 10, 20, 30, 50% profit would be pretty nice. And I think I sold one of these. Yeah, so I sold one. Must have had two and sold one for $1.34. So I almost took a double on that one. So I will definitely just take a triple, a 3x. More than happy to do that. To follow my roll with 90 days left. Let's see, January. I would have only had one more month that I could hold that anyway. So if Tesla bounces off 420, which is the perfect Tesla number, and then drops back down to, I don't know, 350, 375, then I'd probably lose my chance to make money on this call. So I think this is the perfect time to take a little profit there. It's not like a lottery ticket or anything. It was just a couple of positions, but that buying power plus the, 300, 400 shares of CLSK that were sold over the weekend. Yeah. So I sold 300 shares of CLSK over the weekend. So I'll have about $3,000 to play with today in this account. Yeah. About 3,500. So I think that makes sense to go ahead and book those profits. But yeah, Tesla's the exciting one. But anyway, back on topic. I decided to see what a reasonable investor or expectation might be. And so a lot of people like to, it's not necessarily cherry picking exactly because the increments are just the defaults, right? So if you do 3 months Bitcoin to Strategy, let's see, Bitcoin's up 8%, Strategy's probably going to be down, 16%. So this is what people are mad about. And even if they do a year, what's a year? A year is probably still a little bit disappointing because Bitcoin's up 91% and Strategy's up 135%. And if you're assuming that Strategy is going to be a 2x on average Bitcoin play, strategies, up big time. So it's up, what was it back here? So if it was 137, it's up more than double. So actually, that's still reasonable. You really can't complain. If in a year Bitcoin is up not quite double, Bitcoin's up almost double. So a year ago, if you plunked 100 grand into Bitcoin, you wouldn't quite have 200K. But if you plunked 100 grand into strategy at 137, you'd more than double your money. So even over the past year, strategies held up with the 2x return. But I'm going to, even 1 year, I don't know, you can call that cherry picking exactly. I think it makes sense. And that's the work, the numbers that I pulled is if you were a Bitcoiner and 2023, end of 2023, beginning of 2024 comes around and you're like, you know what, the halving's coming up. I think we're in a bull market. I think Bitcoin's going to rip. And because I'm not a moron, I, I'm not buying the tops here. I'm forward thinking and I'm saying, okay, Bitcoin's going to rip. Strategy is leveraged play, so maybe they'll go up twice as much. Let's say that was your reasonable expectation on January 1st of 2024. Only a couple of months before the halving. I think that's kind of a fair starting point. And so I put together this little spreadsheet. On January 2nd, 2024, strategy was trading at 68. Bitcoin was at 42,984. Just a quick little double check. Double check me. Let's see. Wait, where's 2024? Here we go. January 2nd, 2024. The close was 68.52. Bitcoin. January 2nd. The close was 42,984. Okay. Just double checking that my numbers are correct. The price today when I checked this was $321.28 for strategy and $114,558 for Bitcoin. That leaves you with a $252 gain on strategy, a 368% increase, which would be 4.69xing your money. If you put 100 grand into strategy on January 2nd, it would now be worth $469,000. If you put 100 grand into Bitcoin on January 2nd, 2024, you would have done very well. You would now have $267,000 worth of Bitcoin. And, strategy almost got the 2x, right? Doubling the 2.6x strategy would have needed to end at a 5.2, 5.3x multiple, which is, just a tiny bit short of the 2x. But that's a far cry from what a lot of the people who are pissed off over the last 6 months of strategy's price and love to, okay, look at the 1 week, look at the 1 month, look at the 3 month, look at the year to date, look at the, whatever. But we'll see why that is not reasonable very soon, because we have November of 2024. And if you had invested in since January 2nd of 2024, you would have had a 479% increase or a 5.8x multiple. And this is at the close. On November 21st, the high was actually like 500 and something a share. I only am saying, okay, most investors are really only going to participate in the market during trading hours, right? You're not going to be doing after hours trading. But I assume you could have market order smashed after hours potentially. I don't really know. I've never really traded after hours. So I'm only going by the close, which is 397.28. That was still a 5.8 multiple. Bitcoin was trading at 99,000, which is a 2.3x multiple. Double that would be 4.6x. So strategy, even at the closing price, has overperformed even a 2x leverage position. And let me just see, what was it? What was strategy? I want to see what the all-time high was. It's like 500 and... Oh, where's... There we go. So November 21st. Okay, so the high was actually $543. So that's insane. If I change this to 543, that puts strategy at a 7.9x multiple. But what people are doing is they're calling this blow off top, this insane, once in a cycle, potentially, event. They're saying that this is normal. This is the baseline instead of the insane blow off top when it's overbought to bejesus, right? FOMO, et cetera, et cetera. And so this was always going to have a correction. This price here was never real. This was fake news. And the ATM or the 2121 plan that people were pissed off about, they did it too fast. Those are all, may have had some kind of effect, but the price was always going to correct from this. They could have had zero ATM, and the correction would probably would have been even worse, because if strategy is a Bitcoin leverage play, it's going to be leveraged to the upside, but then it's also going to be leveraged to the downside. So if they hadn't delevered with the ATM aggressively, that correction, which, got down to what, like 225 or something, maybe it would have been 175. There's no way to really to know. But if they were carrying more leverage, it makes sense that leverage would have hurt them to the downside as much as it helped to the upside. And if the current price, like what's the fair price? If Bitcoin's up 2.3x from January, then that means if we take the January 2nd price and multiply times 4.6, that would be double Bitcoin's return, right? So starting from January 2nd, 2024, the fair, if you want to say that strategy should be a 2x Bitcoin play, then strategy's fair price right now is $315.19. So strategy is right where it's supposed to be. Slightly above where it's supposed to be. You can, if I want to tell myself an even better story, I can do 5 years of strategy and go 5 years of Bitcoin. Bitcoin is up like a little bit over a 10x. It's from 10 grand to 114. So that's like 11x. Strategies up. I can't do this math in my head. Up from 14 to 323, so that's up $309. What's that? Actually, I just take 323 divided by 14 bucks. So strategy's up 23x compared to Bitcoin's 11x. Let me just see. 10,009. So 114, let's call it 115 divided by 10.9. 114 divided by 10.9. Oops. Yeah. Bitcoin's up 10.4x. Strategy's up, whatever did I say, 23x, something like that. But if you want to tell yourself a different story, you can zoom in and you can say, oh no, strategies ATMing ruined the price action. The 21-21 plan ruined the price action. The preferreds ruined the price action. But all of this shit, this correction was inevitable. Even if they had the convertible bonds, they never had preferreds. They weren't hammering the ATM to bejesus. This was all inevitable. Even the timing of this, right? So strategy shit the bed the worst. February, March, April. What was the market doing? Pepperidge Farm remembers the market was bottoming the fuck out in April. So strategy was having a correction from a blow off top back in here in November, which actually the whole market kind of was peaking in November, and then I guess double topped in February. So the whole market was in the middle of a correction in March and April, which it kind of only makes sense when the entire market tries to take everything down with it and it tries to take everything up with it. So strategy was in the middle of a correction from absolute ridiculous euphoria, and the market was taking a dump. So this was, to me, completely routine, business as usual. This should all have been expected. Or if we don't have the foresight to expect it, at least not be surprised by it. That this was in the range of outcomes. $400, $500 a share, drops in half to 240, 239, 237. That's just what it does. What happened in March 2024, we had the blow off top to 200 a share, corrected down almost 50%, almost 50%, almost 50%. This is all basically just the market doing exactly what the market does. And I'm not going to go so far as to say that the ATM is invisible. I think I probably was a little bit overconvinced by the description of the, is it the VWAP or whatever? And they're like, oh yeah, the algorithm has them out there at the ATM and it's not supposed to do anything to the price. But at the same time, we're trying to hold two opposite thoughts in our heads, right? We're saying, okay, if these trading algorithms are supposed to let them sell strategy ATM and be completely invisible and not move the market, then why do we expect strategy and all these Bitcoin treasury companies buying Bitcoin with the algorithms? Why do we expect that to pump Bitcoin's price? Like one of those, they both I don't know. Unless there's an explanation that I'm not aware of, both of those things can't be true. But I think it is their best attempt to try not to move the market. But at some point the shares or the Bitcoin that's available to everyone, the entire market, it has to get used up and then the price moves. So maybe it's not like, I think it's just basically it's the responsible way to be in the market. Whereas, sometimes you'll see in Bitcoin, okay, some whale just dropped 10,000 Bitcoin on the market at a certain price and then it tanks it. That's kind of like the irresponsible way to be in the market that an individual you know is free to do, but institutions have to try to play nice or whatever. So I don't think that the ATM is nothing, but I don't think it's the boogeyman that so many people need it to be, because if your cost basis is above strategy's current price, you need someone to blame and you need an explanation for that. And of course, it can't be that you bought at the wrong time or that your investment horizon is too short, right? Those can't be the answers, because everything always has to be somebody else's fault. Um, yeah, so I think that's all I got to say about that. Andre says, can you trend strategy IBIT? So MSTR priced in IBIT compared to the performance year to date. Yeah, it's not good. Um, Year to date is not going to be good. I have looked at this one before. So just quickly, strategies up 8% year to date. IBIT would be up 18% year to date. But again, I think this is explained by if your entry price was at January 1st, 2025, then you bought in the middle of a correction from strategy's unreasonable all-time high of $543 um, trading after hours. Let's see, going back farther than a year ago was a different strategy, right? They started heavy ATM 1 year ago. Yeah, and see, that's kind of my point, is that of course there are going to be things that happen. Um, let's see, if MNAV starts to run back up, won't they just ATM it back down? How do we ever run up again? Well, maybe we never get a euphoric blow off top like this again. I have no idea. But the point is, this was never really supposed to happen. This was just the market being irrational. That was strategy. If strategy is supposed to be a 2x play, November was a 4x play. So how can we ever run up again? So in my mind, it's a long-term bet on whether you believe that the preferreds are more accretive to stacking Bitcoin than the convertible bonds were. Um, and I don't think the ATM, like when the ATM was first introduced, I I mean, most people were all for it. They understood that it was it sounds like an oxymoron, accretive dilution. But if you don't believe that ATM is accretive, then you would come to the conclusion that, yeah, it would never run up again. If you don't believe that selling strategy shares at the market at some multiple above 1 MNAV is worth stacking Bitcoin, then your thesis is that strategy is trending towards, 1 MNAV, and it's never going to trade above its Bitcoin holdings. But this was always the case. Because how did convertible bonds even work? Convertible bonds was not literally, but figuratively just strategy agreeing to ATM at a certain price. So if the convertible bond that strategy got back here in 2023, 2024, whatever, they were issuing these loans basically to strategy and saying, here's $1 billion fucking dollars with no interest. So when I heard that, I'm like, that doesn't make sense that strategy can borrow with 0% interest. Like I just had that, the meme where pick any of the memes where someone just looks bewildered. With the little math and trigonometry growing across the screen and just looking confused as shit. So, of course, I had to do a little bit of digging and understand how the convertible bonds work. They're not interest free. They're saying, okay, we're loaning these with 0% interest, but written into it, like if strategy was trading at $30 a share, the bondholder is saying, we're going to loan you this cool billion, and we're not going to make you make us any interest payments. But when strategy goes to frickin' $200 a share, we want our money back with interest and in the form of shares that those convertible bondholders are going to dump onto the market. And of course, they've already hedged out most of their profits before that even happens anyway. The point being is strategy was always diluting. So whether strategy is selling ATM directly or selling the right to ATM to these convertible bondholders, and they're the ones doing it, doesn't really matter because the principle is the same. You either think that strategy should borrow money and sell shares of strategy to pay for it, whether it's with the convertible bonds that nobody was bitching about, or whether you think it's more accretive to do it with the preferreds, which is my take on it. It was always ATM. So this business about, but strategy started doing the ATM is a distinction without a difference. It was always ATM. It was always increasing the number of shares and strategy using that to pay for these loans. We're just doing it a little different now. Now, the main criticism, or if I'm bearish at all about, having another one of these blow off tops, is because the preferreds are not mature enough. So when they're doing these convertible bond deals, and I'm sure that those deals would have just gotten bigger and bigger and bigger. So I don't remember what the largest convertible bond deal was for that strategy ever did. I'm sure it was a couple of billion. But as Bitcoin's price pumped, I'm sure they could probably get 2 billion, 3 billion, 4 billion. They would have just kept setting records on like largest convertible bond deals. But I'm glad we're not doing that because the bond holders are not aligned with our incentives. And so if you're worrying about never being able to get, a euphoric moment like this, like it's even harder when the bondholders are hammering their sales and just hedging out every last little bit. Because strategy was out here selling ATM, but so were the bondholders. So at least once we get all the bond deals off, at least it'll just be strategy out here selling ATM, but not strategy and the convertible bond holders. They're the bond holders were not really aligned with the common stock shareholders, as far as I can tell. You could argue that since Strife has a higher claim to the Bitcoin, they're maybe not even aligned necessarily 100% with common stock shareholders either. And I think they have higher voting rights or something too. But I guess you could make some kind of argument like that. But it was always ATM. I need that. Maybe I need that meme where it's the two astronauts in space, and one of them's like says, "Oh, the Earth is flat" or something, and the other one says it always has been, and then he's got a gun to the back of the guy's head. I need a meme like that says the first astronaut will say something like, "Oh, it was always the ATM," and then the other guy says it always was the ATM or something, and then pops the guy. Yeah, so it was always ATM and it was always accretive, or else it was always ATM and it was never accretive. I think those are your two choices. And unfortunately for the preferreds, it's going to take time to ramp up. We can't just slam billion after billion after billion of convertible bond deals and just slam leverage into the company. Eventually, the preferred market will get much larger, much more mature, but for now, they're just babies in infancy, and we might not be able to generate the kind of leverage that we would like to be able to generate as quickly as possible. It's nice that strategy is going to have all those levers, right? They can sell preferreds when they want more leverage. They can sell ATM when they want to de-lever. So it's nice that they can pull all those levers in either direction that they want, which is going to be another benefit of the ATM, because if Bitcoin does go into a bear market, goes up to 200 and crashes back down to 100, we're not going to want to be a 2x levered play when Bitcoin crashes 50%. We're going to want strategy to have hammered the ATM when Bitcoin's at 200 and strategy's at whatever, 1,000, 1,500 or something. Dump all of that leverage, and then when Bitcoin crashes 50%, we won't have to watch strategy crash 75%. Maybe it only crashes 50%. So maybe we'll get 2x to the upside and only 1x MNAV to the downside. Not 1x MNAV, but 1x multiple to the downside. That would be kind of cool. But the whole time that's happening, are people going to be bitching that there's a divergence in the IBIT strategy ratio? No, they're not. They only bitch when it's not day by day, hour for hour, minute by minute to the upside. So hopefully they will be able to, downshift or something when Bitcoin is crashing, and put the pedal to the metal in the other direction. But all of that remains to be seen. Let's see, Rangeland Capital. It is tough letting longer term common build while I am forced to keep rolling calls out. Yeah, calls are a different story. And I've never been more worried about my long calls. So I was sure, right? I was trying to predict that history would repeat itself, right? So in March, or excuse me, in 2024, we had a March pump and everybody's calls printed. And then in 2024, we got a second pump and everyone's calls printed. And I kind of projected that into 2025 and said, oh, well, maybe we'll get two pumps in 2025, right? Might not necessarily be March and November, but it could be August and December or whatever. And we got no real pump. In July, we returned to all-time highs, but we didn't go from 50 to 200. We didn't go from 100 to 500. We basically just returned to all-time highs and then fizzled out. So I feel your pain with the long calls and just I have lost, I would guess, at least $100,000 worth of long calls expiring 90% worthless in 2025 because they never happened. They never printed. The only ones that printed, I had June 1080s, I had July 1080s, I had September's and December's, and the only ones that profited were the September's because of this pump here. I was able to take some profits somewhere between May and July on my September 1080s. And other than that, almost all of my calls in 2025, my long calls, have all gone to shit. So I am on your side, but they've said from the very beginning they're not trying to make your calls print. He kind of tried to throw a bone to the, when they said, oh, we're going to give the guidance and, why would you buy a 600 strike call if we're going to sell ATM at 500 or something? And while that made sense and it was nice to hear, I kind of didn't like it because the market is supposed to not be able to expect what's going to happen. The way that it's supposed to work is half the market buys calls and the other half sells calls. And the threat is supposed to be that the people who are buying the calls could get completely wrecked, like we've been getting wrecked on our long calls all 2025. Or, maybe they're not aggressively selling the ATM at a certain point, and maybe there's a short squeeze, and the long call buyers print money, and all of the covered call sellers get wrecked. There's supposed to be like a, kind of a 50-50 chance there. So I really didn't like the way that they put out the guidance because it seemed like it was a little bit too predictable for the covered call seller people to just hammer covered calls at a certain MNAV. So I actually prefer that they revised the guidance. I know it's not a good look that they came out with guidance and then like almost immediately revised it. It's like you kind of have to admit that one of the two was a mistake. I think the original guidance was the mistake. So I'm not glad that they fucked it up, but I am glad that they fixed the glitch quickly. But yeah, your long calls are they're not fun in 2025. So Dan says, anyone in chat have thoughts about this? Yeah, I can't even see how many people are in here because Restream is only counting the YouTubers. So it looks like I only have 19 people watching the video. Let's see, Andre, can't they just use preferred capital to stack Bitcoin and only use strategy ATM to pay preferred dividends? Yeah, they could do that. However, the preferred, like I said, the preferred market is not mature enough yet to really generate a ton of leverage, which means they can't stack Bitcoin as fast as they would like. And um, I'm assuming they've got some kind of targets where they deem ATMing at whatever MNAV is stacking Bitcoin at a reasonable price. And even if preferreds didn't exist, they would still be ATMing. Whether they had to pay the dividends or not. Little retard says, plot twist, it is underperforming. Magic P, stock goes down, covered calls print, buy more shares. I'm so freaking coiled right now. When green square up arrow. Yeah, I am desperate for my covered calls to get wrecked so bad. I'm tempted to even but back to Andre's, wait, who said about the rolling? Rangeland Capital. As a covered call seller, we have something called roll until you're right. And that's basically what I and probably a lot of us have been doing with our long calls, but it doesn't necessarily work that way. So when you're selling a covered call, like let's say I sell the 350 and then the price goes to 365, well then I try to roll out to a longer expiration and try to roll for a credit. And if the price keeps going up, I keep trying to roll and I keep trying to roll and I keep trying to roll. And eventually you roll until the price of the stock reaches a certain number and then comes down. And then you wipe the sweat off your brow and you're like, oof, I didn't have shares called away. And, I basically rolled until I was right. And what a lot of us have been doing all 2025 is buying long calls of whatever strike and expiration, doesn't really matter, and not printing. And then, maybe I've been doing it when there's 90 days left, but taking whatever little bit of value they have and, okay, now I'm going to roll out to 180 days with my, $3,000. Maybe I bought it for 6 and now it's worth 3. So now I'm going to be like, okay, what strike can I afford with my $3,000? Okay, now this is the lowest strike that I can buy with my $3,000. And then the price doesn't move and now it's only worth 1,500. And you're like, fuck, now I can only roll it to the 500 strike. 520. And the portfolio just keeps evaporating. So for me personally, I'm still holding out hope that we get some kind of Bitcoin movement before the end of the year and strategy decides to ride along and pump with it. And so I'm going to keep rolling my long calls through the end of the year, trying to, one last gasp to hit the lottery. And if it doesn't, and strategy is still trading at 325 or below, or anywhere below 400, really would all suck ass. And if Bitcoin is still trading under 125 by the end of the year, then I'm calling the bull market over. I'm still betting a large amount of money that Bitcoin goes to, I don't know, 150, 200. Anything above 150 would at least I think pump strategy in the Bitcoin treasury company is enough to where I could at least dust myself off and lick my wounds and not be completely frustrated with 2025. But if it doesn't happen, I fully understand that that is in the range of outcomes because Bitcoin can do whatever the fuck it wants to do. I know money printer about to go burr. I know Saudi Arabia and everybody else is buying freaking Bitcoin. Um, but the market doesn't have to do anything that we think it should do or want it to do. I want number go up, but Bitcoin doesn't really give a fuck. It's either gonna pump or it ain't gonna. What's up, Angry Buddha? Oh, but to your point, Magic Pete, I'm tempted. Like it's mid-September, and I'm like, okay, if we do get a last gasp for the end of the year, and it takes I don't know 4 to 8 weeks to happen, it's gotta it's gotta happen now. So I'm kind of tempted to take off a bunch of my covered calls. Ugh. But I already have a negative net theta. So like I'm already leveraged to the upside even with the covered calls on. But I've never been more tempted to make a bet that we get a pump. I'm usually very ambivalent about staying neutral about my price predictions, meaning I don't make any price predictions. Um, Other than a very vague, like, okay, Bitcoin is in a bull market. Like, I was willing to accept that and think, okay, numbers going up for at least the next year and a half, right? Starting in 2024 sometime, a couple years of bull market. I was willing to make that bet. But I'm like, I mean, if it's going to happen, it feels like it is coiling and it would have to start happening soon. So, ugh, yeah, I am, I've got 1,300 shares. They're all covered. But, I mean, I've got a ton of long calls that are all just upside. But yeah, I am very tempted to start like maybe the next time I roll, maybe I only put 12 covered calls back on. If the next 2 weeks goes by, I'm tempted to do it because it just feels like something needs to happen soon. But then on the other hand, I can go back and forth on this because just looking at the chart, I mean, are we really calling 235? Or I'm sorry, what was this? I don't know. 250 didn't really feel like capitulation in. Oh, I'm sorry, that's February. Yeah. Like 325, it just doesn't feel painful enough. I hate to say it, but this doesn't feel painful enough for us to rock it back. Like when people felt the pain of 250 down here, 225, whatever this was, 237, that was like, okay, people really felt that pain from 500 down to 237. But, we went up to 450 again and okay, we're back down to 325. Like this doesn't seem like blood in the streets level to where, oh yeah, we need to unload all of the weak lettuce hands which would be something like what happened in April. Like this is not. This is just kind of been like a gradual decline here. So if Bitcoin doesn't take us into a rally, Bitcoin trades at 115 the rest of the year. Strategy gets absolutely depressing to think about because I think max pain would probably be somewhere between 250 and 275 ish, maybe. Yeah, that might do it. If we crash back down to these levels again, then maybe we get another pump, even without Bitcoin. So Bitcoin's either going to take us higher, or I don't really see any other way, right? Like lower interest rates, that's going to pump the whole market. So if that's what stimulates Bitcoin, then you can say that the lower interest rates stimulated strategy, or you can say that interest rates stimulated Bitcoin, which stimulated strategy, which I don't really care. Doesn't make any difference to me how you look at it. But yeah, I don't really see strategy pumping on its own without Bitcoin, except if people start front running S&P 500 inclusion. So they got snubbed, but if we start seeing higher highs and higher lows from here, maybe we don't crash down to 250 again, but if institutions maybe start front running S&P 500 inclusion, it's supposed to be a secret committee, but I don't have enough faith in the fiat system that there's no fucking insider trading. So I'm sure the institutions will know before anyone that strategy is going to be included, even though, since it's supposed to be a secret, I'm sure they all fucking know. But, even if they don't send out a bat signal like, hey, start buying strategy, it's getting in, I think the institutions are probably smart enough to figure out that it's going to happen at some point. So that's really the only catalyst that I can think of that would stimulate strategy, but not stimulate Bitcoin. Everything else is kind of macro. And if macro pumps Bitcoin, then macro pumps strategy along with it. But S&P 500 inclusion only benefits strategy. It doesn't really benefit Bitcoin directly. So that's the only catalyst that I can think of that could pump strategy's price, even if Bitcoin is still trading at 115 6 months from now, right? S&P 500 inclusion could cause some front running. So that's the only real thing that I'm kind of holding out hope. So we either need S&P 500 inclusion to be front run, or a Bitcoin rally, or what would be pretty fucking cool is if both of those things happened at once. That might be enough to give us another one of these November 2024 moments. So I got my fingers crossed. Yeah. Yeah. I try not to make like official, okay. I don't want anybody thinking, oh, I was in here studying the chart and I'm like, okay, well, Bitcoin was at 100, it's going to go to 150. But yeah, I'm willing to make some kind of vague directional bet that, the bull market isn't over. Maybe it does the 4-year thing. Some people think it's going to do a super cycle, but yeah, it's just vibes, really. It just doesn't seem like the Bitcoin pump can be over at a kind of disappointing 115 with all of the nation state buying, Bitcoin treasury company buying, interest rates collapsing, money printer, go burr, you know, all of those things just makes me think Bitcoin higher. I don't know if it's going to be 125, 150, 200, a million. But I am willing to say that I think it's up to something. But yeah, that's a good point. Magic P says always collect theta no matter how bullish. Yeah, that's been my motto since I started selling covered calls in 2020. And I've missed out on an upside every once in a while, but yeah, it's not really failed. It's not really ever failed to deliver, Magic Pete. Andre says, we just heard so much upside potential last spring with ETFs, BTC, TC, Strategic Reserve. Yeah. And we covered a lot of those catalysts. We even had a spreadsheet of the catalysts on the True North call. And there wasn't any kind of like the two pumps that did happen in 2024. It's not like there was, okay, we can pick, okay, this catalyst from the list is what caused this. Oh, and this catalyst from the list is what caused this. It was actually probably the catalyst that I don't think ever made it onto our spreadsheet, what probably caused the November one, which was the results of the election and just the market being bullish on Bitcoin. Like the enemies of Bitcoin were I don't know, voted out, I suppose. And you know, maybe that was the catalyst that drove this. And Saylor even admitted that that was the red sweep, gave them the confidence to really hammer the ATM and try to get as much Bitcoin as possible, because the administration was all pro Bitcoin. So maybe the one catalyst that actually had an effect was the one that we missed. I don't know. I don't know if that ever made it onto the list. But all of the other catalysts were kind of like, well, we're still waiting to see if the S&P 500 potential catalyst amounts to anything. But, you know, it's not like we can say, oh, yeah, the number 3 catalyst on the list was what caused this March pump, and this other catalyst is what pumped November. But it could be, I don't know how many, let's just say a dozen different catalysts, all kind of form a general, I don't know, like when you pour a bunch of chemicals together and combined, they all do something, but individually, they don't do much of anything. Maybe they're inert. One by one, they're inert, but all together, they actually do something. The beatings will continue until morale improves. That sounds like a sure bet. Selling cash secured puts feels tempting. Yeah, I mean, I don't really differentiate between cash secured puts and covered calls. Like they all seem to generate the same amount of profit. I can get $700 at the money for this week, $700 on the covered call. So the profits are pretty similar. Let me see if I go out 45 days to, let's do the 300 strike. I can get $300 or $1,300. And if I go $25 over the current price to 350, I can get 1,500. So what did I say? So you could actually buy 100 shares, sell the 350 strike and get 1,500, but selling the 300 strike would only get you 1,300. So the profits on cash secured puts and covered calls is nearly identical. So to me, if it's a good cash secured put environment, it's a good covered call environment. Dan says, any thoughts about my idea above? Let me scroll up. Did I miss it? Oh, when you were asking the chat about thoughts, do you have something? Okay, so you said this. Anyone in chat have thoughts about this? But what was this? I don't see your message, unless you were just talking about what I've been talking about. So I'm not sure what idea you were talking about. So either it didn't post or I'm not seeing the comment. Oh yeah, I tried to when I was spectating the True North one time, I tried to post a really long comment and it just disappeared. It didn't post. So I think there's a limit on the size of the comment or something. Okay, so I already took my little profits on Tesla and I've got a bunch of CLSK money because I've sold 300 shares or something. So I've got 3,500 to play with. I think I could probably might as well just plow it right back into CLSK cash secured puts because that's the one stock that I've been trading that hasn't pumped. So I've kind of been playing the wheel. I was playing the wheel on CLSK, Riot, Iron, Hut. What's the other one that I'm missing? I said Iron. Anyway, those all pumped. And so I kind of just let my shares get called away and never really saw an entry price that I wanted to get back into. But CLSK is the one that's still been kind of like not doing much. So I don't know if that means they're a good deal or if that just means they're bums. But I'm going to go ahead and sell three of them. Well, I'm going to sell one of them. All right, I got to put. So one of them filled, and the other two are still placed. Do I have pending orders? Yeah, there we go. Cancel. Oh my god, I have to wait for it to clear. There we go. All right, that should have used up almost all of my buying power. I've got 457, 800 bucks. So I can light some more money on fire buying. What am I out to now? Strategy February. Maybe I'll buy one. I thought that would insta fill. All right, let's do 3.55. There we go. All right. I usually do the 5K account last, but start there. Whoops. All right, the main account, not ready to roll. Not ready to roll. So nothing really to do here. The IRA. Do I take some more profits off the table with Tesla? So we were at 420. So I've missed the top a little bit. But I can basically double my money on these. So I'm just going to close 2 of them. And I've got this one that I've had open for 55 days. And unfortunately, it doesn't look like I selected this. Even 55 days ago, plus the 276 days of to expiration that it has now, doesn't put me to a year, which means that no matter when I take profits on this thing, I can't get myself long-term capital gains tax. So if this was like a December call, I might consider hedging it out instead of actually closing it, and then try to hold on to it for a year for a little bit of a tax benefit. But since that doesn't matter, I can almost double my money on this. So maybe this one, since it's the longest expiration, maybe I'll keep this one, and I'll just sell this one as well. I'll get rid of the shortest days to expiration first. And holy smokes. So this October 350, I might have to use all of that to roll this thing anyway, even if I huh. So maybe I'll leave this in cash. Or I could roll this now. This bad boy got absolutely destroyed. I don't remember how long I've had these shares. Probably not for very long. Oh, 55 days. Oh, no, that's this. It's 55 days. But I might try to hold on to these 100 shares as long as possible. So maybe I'll leave that in cash and I won't rotate it over into strategy. Let me see what's going to cost me to roll this. To roll it out to the expected move would cost me basically all of the profits. Hmm. All right, let me evaluate this. So this 350 strike has now gone in the money. And the difference is 417 to 350. So $6,700 of this 7,000 is all intrinsic, which means the only reason for me to hold on to this position would be to capture the other 400 bucks. So there's $400 worth of extrinsic value left in here, and I sold it for 1,000. So there's less than 50% of that available. So I don't think this makes sense for me to hold on to any longer. But let's play the roll until you're right game. And I'm just going to roll to the fairly aggressive, almost at the money strike. And let's kick the can down the road a little bit. So that snatched up most of the profits that I took. But I can use the last little remaining 1,400 bucks to add some strategy, since I think strategy is the value at this point. So 1,400, and looks like I'm buying the marches, so I can get 2 of these. So I am paying for my strategy addiction with my Tesla profits, basically. Yeah, leaves me 500. Oh, leaves me 500 bucks. I can get one more. Thought that would fill. Come on. Thank you. All right, now I got no money left. And again, that's the, oh, you know what? Was I? So I said all of that stuff about long-term capital gains tax, and I forgot that that was the IRA. None of that shit mattered. All right, not ready to roll. So I don't think there's going to be anything happening here. And same deal here. So I've got these aggressive near at the money covered calls, and they're already down 50% in one trading day. So let me roll. Maybe can I do a partial? Roll 2 of them down to the expected move. Maybe I could do all 4. I'll just do all 4 of them. If I could get a fill. All right. That puts a little cash in there. I'm try to get away with that for maybe one more week, and then we'll see. And again, $1,500. These cost $350. So 4 of them. Yeah, I should be able to get 4 of them. All right. That should be everything. Let's check the chats and call it a day. Sold a bunch of the 250 puts last Friday on Strive and bought a mix of the 10 to $15 and 15 to 20 for 116. Yeah, just be careful with the I think the pipe investors unlock very soon. So it could tank. I've still got my cash secured put here as well, but I just have one of them. And so if ASST crashes to whatever, I don't know what the pipe investors got in at, but I suspect that's why there's so much premium in here, is because they just know this is going to take a dump in the short term. But if I want to hold my Tesla 360, 390 till expiration, 116, or roll up and out, we'll wait until end of October, most likely. But is that a spread, or are those your covered calls? CT, MSTR feels so compressed here. I'm hesitant to sell more covered calls, but this stock has turned into a complete dud. Yeah, I agree. It does make me nervous for my covered calls, but I swear I've got multiple personality disorder at this point, because it just seems like the market's ripe to make all my covered calls get wrecked, but then at the same time, I kind of feel like my long calls are hopeless. And both of those, well, to a certain extent, both of those can't be true, but we could pump just enough for my covered calls to get wrecked, but not enough to make my longs print. That's probably most Max Payne scenario. Racy, under what conditions is it impossible to roll a covered call up and out for a net credit? Only if you are determined to roll to a particular strike. So let's just go to strategy, or excuse me, to Tesla. This is, oh no, I already rolled it. So I was rolling the 350, right? I was rolling the 350 strike, and I had to pay like $6,000 for that to roll it to the 425. So if I was like, okay, I'm not going to roll it unless it's for a credit, then I would have had to rolled it like way up here. Like maybe I could have rolled from the 350 to the 360. So I would be rolling up $10 from 350 to 360, and I would be rolling out to 46 days from, I think it was like 18 days. But this is not get me out of the money. Like, this thing is still underwater, and I would need Tesla to crash back down below 360 in order to close this for less than I sold it for. So you can always roll up and out. It might not be a very attractive strike, because I can either roll up $10 and out to break even, but I'm still kind of like way upside down on Tesla, which, Tesla could run to 475 and I would just be, this roll would have been kind of meaningless. But if you don't mind rolling up and out to here and paying a debit, like the whatever it was, the 3 or 4 grand that I paid, then there's always a way to roll up and out. It just might not be for a credit. When is it impossible to roll a covered call up and out for a credit? The only way that it would be impossible is if there was no liquidity there. So if you were trying to roll up and out to a certain strike and there just were literally no buyers, there was no one, you're trying to sell it, but nobody wants to buy it. If the liquidity was dried up, that could be a problem. But as long as it's a liquid market, there's always going to be somebody there. And just as an extreme example, it might be more trouble than it's worth. Like if Tesla had run to 600 a share, if I don't have enough money to cover it, then I can't even, in order to avoid paying the 20 grand it would cost me to roll that, I would be rolling to like, the 425 strike, and the price of Tesla's at 550, I would just be like, it would be like, I don't know, standing in the ocean and trying to stop the waves from crashing into the beach or something. I'm not sure that would be an effective use of my time and money. Is like something has a massive move like that in short order. Are you going to continue to roll in the money strikes? So it's never impossible, but at some point I might just be like, screw it, my shares are getting called away, right? If I'm selling the 425 strike and Tesla goes to 700 a share, fuck it, you can have the shares. I'm not going to pay 30 grand to roll these damn things, or just keep rolling to, the 435 and then wait another month and a half and roll to the 40, the 450 and wait another month and a half and roll to the 475, and and just trying to roll until I'm right. At some point I'd probably just give up. All right, we're all caught up on the chats.